In today's financial markets, investors face a pivotal choice: the adrenaline-fueled world of day trading or the patient, conviction-driven path of HODLing. Day traders chase quick profits through rapid trades, while hodlers commit to long-term growth, weathering market storms with unwavering belief. Your choice isn't just about strategy, it's about your personality, risk tolerance, and lifestyle. Let's break down these two approaches to help you find your best fit in the evolving landscape of 2025. Day trading is all about speed, a whirlwind of decisions made in the blink of an eye. It's a strategy where timing is everything, and fortunes can be won or lost in a matter of minutes. The goal? To capitalize on intraday price fluctuations, exploiting short-term market inefficiencies for quick gains, buying and selling within a single day. Positions are opened and closed before the market closes, ensuring no overnight exposure to unpredictable events. This rapid-fire approach requires constant monitoring and lightning-fast execution. To profit from small price swings, often just fractions of a percent. These tiny gains, known as scalps, add up over time through high-volume trading. It's a game of precision and discipline where even the smallest misstep can be costly. Relying on technical analysis, the art of interpreting charts and indicators to predict future price movements. Day traders pore over candlestick patterns, moving averages, and other technical signals to identify potential entry and exit points, and quick reflexes. Hesitation can mean missed opportunities or worse, losses. Day traders must be able to react instantly to changing market conditions, executing trades with speed and precision. HODLing, on the other hand, means buying and holding assets for years, even decades. It's a long-term strategy based on the belief that the value of an asset will increase over time, regardless of short-term fluctuations. Ignoring short-term noise, the daily ups and downs of the market that can rattle even the most seasoned investors. Hodlers understand that volatility is a natural part of the investment cycle and that trying to time the market is often a fool's errand. And focusing on long-term fundamentals, such as a company's earnings, revenue growth, and competitive advantages. Hodlers conduct thorough research to identify assets with strong long-term potential, then patiently wait for their value to appreciate. Day traders thrive on volatility and instant feedback, constantly seeking opportunities to profit from market fluctuations. The adrenaline rush of quick wins and the sting of immediate losses are all part of the game. While hodlers trust in the asset's future value, remaining steadfast in their conviction even during periods of market turmoil. They believe that time is their greatest ally, allowing the power of compounding to work its magic, riding out market cycles, weathering the inevitable ups and downs with patience and fortitude. They understand that bear markets are temporary and that long-term growth is the ultimate goal. The core difference? Day traders see time as a series of fleeting opportunities, a constant race against the clock to capture profits before they disappear. Every second counts, and decisions must be made quickly and decisively. Hodlers see it as an ally for compounding growth, allowing their investments to grow exponentially over time. They understand that patience is a virtue, and that the greatest rewards come to those who are willing to wait. Day trading demands constant attention, requiring traders to be glued to their screens for hours on end, monitoring market movements and reacting to news events. It's a high-pressure environment that can be both exhilarating and exhausting. Technical tools and emotional discipline. The ability to control emotions and stick to a trading plan is crucial for success. Fear and greed can lead to impulsive decisions and costly mistakes. HODLing requires research, a deep understanding of the assets being held, and the conviction to stay the course even when the market is crashing. Patience, and the ability to stay calm during downturns. It's about having a long-term perspective and not getting caught up in the short-term hysteria. These mindsets rarely overlap. They represent fundamentally different approaches to investing. Each demands a unique skill set and temperament. One requires the agility of a sprinter, the other the endurance of a marathon runner. Day trading offers the lure of fast profits, the promise of turning small sums into substantial wealth in a single day. It's a siren song that attracts many but few truly master. The rapid-fire nature of day trading, with multiple trades executed every hour or even every minute, can add up quickly if you're skilled and have a knack for reading market trends. Successful day traders capitalize on minute price fluctuations, generating profits from volume. But the same leverage that boosts gains, amplifying your buying power and potential returns, can wipe out your account just as fast. Leverage is a double-edged sword. And without careful risk management, a single misstep can lead to devastating losses. Every trade is a high-stakes decision, a calculated gamble where knowledge, intuition, and speed are your greatest assets. And emotional mistakes, driven by fear or greed, can be incredibly costly, eroding your capital and confidence. Discipline is paramount. The upside? No overnight risk. All positions are closed daily, shielding you from the unpredictable events and market volatility that can occur after hours, providing a sense of security. But the cost is steep. Relentless focus, requiring unwavering attention to market movements and news events. High stress, a constant battle against the market and your own emotions, and mounting transaction fees, which can quickly eat into your profits if you're not careful. Day trading is a full-time job, demanding dedication and commitment, not a side hustle to be pursued casually. Burnout is common, a consequence of the intense pressure and long hours. And only the most disciplined, those who can control their emotions and stick to their strategies, survive in the long run. It's a lifestyle, a complete immersion in the world of finance, not just a strategy to make a quick buck. HODLing's greatest strength is its simplicity. Buy, hold, and let time do the work. It's ideal for those with busy lives, offering a passive path to wealth without daily market monitoring. Long-term holding often means lower taxes, letting your gains compound more efficiently. But patience is tested during market crashes. Watching your portfolio drop can be gut-wrenching. The key is conviction. Only those who truly believe in their assets can hold through the storms. HODLing ties up capital so you might miss out on short-term opportunities elsewhere. It's a test of faith and endurance, not just financial acumen. As we move into 2025, the financial world is undergoing a seismic shift. The strategies that worked in the past may no longer be sufficient. Both day trading and long-term investing strategies face unprecedented challenges. The old playbooks are being rewritten, and participants must adapt or risk being left behind. Regulatory uncertainty looms large, casting a shadow over the markets and creating an environment of unpredictability. New regulations are constantly being proposed and implemented, making it difficult for investors to navigate the landscape. Inflation continues to be a major concern, eroding purchasing power and impacting investment returns. The persistent rise in prices is forcing investors to reassess their strategies and seek out assets that can outpace inflation. And rapid technological innovation is disrupting traditional financial models, creating both opportunities and risks. Fintech companies are revolutionizing the way we invest, trade, and manage our finances. Day traders are finding increased volatility stemming from regulatory news, creating short-term trading opportunities. The constant stream of information and announcements can trigger rapid price swings, which skilled traders can capitalize on. This volatility presents both significant risk and potential opportunity for those who can react quickly and decisively. Careful analysis and risk management are essential for navigating these turbulent waters. Long-term investors or hodlers are hoping for greater regulatory clarity, which could provide much-needed stability to the market. Clear and consistent regulations would help to legitimize digital assets and attract more institutional investment. Such clarity could legitimize their long-term bets on emerging technologies and digital assets. This would provide a more solid foundation for their investment strategies and increase the likelihood of long-term success. The rise of AI and algorithmic trading is transforming the landscape. These technologies are raising the bar for day traders, demanding a higher level of sophistication and skill. This makes speed and real-time data analysis more critical than ever for staying competitive. For hodlers, technological progress is central to their investment thesis. The advancements in DeFi and AI are seen as key drivers of future growth and value creation. These innovations could drive significant future value in the digital economy. The increasing correlation between crypto and traditional stocks means they now move together more closely than ever before. This complicates diversification strategies for everyone. As traditional asset classes become more intertwined, day traders can apply similar tactics across multiple markets, leveraging their skills in different asset classes. But hodlers must fundamentally rethink what true diversification really means in this new, interconnected financial world. The financial landscape is rapidly shifting, presenting both challenges and opportunities. In this environment, adaptability is absolutely key to survival and success. For experienced investors, the smartest play may be a hybrid approach. Allocate most of your portfolio to long-term hodling, anchoring your wealth in assets you trust. Use a smaller portion for active trading, capitalizing on short-term swings without risking your core holdings. Advanced day traders now leverage AI, sentiment analysis, and algorithmic tools to stay ahead. Seasoned hodlers rebalance portfolios and use tax strategies to optimize returns. Ultimately, self-awareness is the most powerful tool. Know your strengths, weaknesses, and what truly suits your temperament. The best strategy is the one you can stick with through both euphoria and panic. There's no universal winner, only the strategy that fits you best. Day trading offers excitement and potential for quick gains, but demands total commitment and nerves of steel. HODLing is simpler and more accessible, but requires patience and the courage to hold through downturns. The 2025 market rewards both skill sets, but also punishes the unprepared. Assess your goals, risk tolerance, and lifestyle honestly before choosing your path. Whether you sprint or run the marathon, success comes from understanding yourself and sticking to a strategy that matches who you are.